Rectangles are a fairly commonly observed pattern. They're also fairly simple. They are a bit like the flags that we discussed. Now, rectangles represent a pause in the trend during which the prices move sideways between two parallel horizontal lines. So again, we're going to be dealing with slightly longer term patterns here, so think in terms of triangles rather than flags or pennants. So if we think about the triangle as where we have two converging trend lines, alright, with a rectangle we're going to have two parallel trend lines. So the peaks and troughs that the price makes will create two parallel trend lines. And that's essentially the main difference between the rectangle and the triangle. Otherwise they're fairly similar. And rectangles are often referred to as trading ranges. Right? So when the price is trading within a range, okay, that can also be the rectangle. And the rectangle as well will also be the support and the resistance. Right? And again, as we mentioned, they're similar to symmetrical triangles, except that trend lines are flat instead of converging. Most of the time, rectangles represent continuation patterns. Right? So a rectangle will represent a pause in the trend before the trend continues in the same direction that it was before. There are occasions where a rectangle will mean a reversal in trend, but a continuation is more likely than a reversal. So what completes the rectangle pattern? Well, in general, if we have a breakout outside either of the trend lines, whether it's going up or down, and again, we can talk about using bands here to avoid whipsaw with this as well as with all the other patterns. And so a break outside the trend lines will represent a change in the trend, right? So that will be the direction of the trend once it breaks out. Now the nice thing about rectangles is that we can use them trading wise for two different purposes. So with most of the continuation patterns we've talked about, we're generally interested in trading the breakout, right? So we're interested in trading the point where the price moves out of the pattern, out of the triangle or the flag or the pennant, and carries on in its previous trend and trading at that time. Now we can do the same with a rectangle, of course. But the other thing we can also do with a rectangle is actually trade swings within the range. So if we have a fairly large rectangle that the price is bouncing off of, we can buy at the bottom of the rectangle, sell at the top, then buy again at the bottom, etc. So we can actually trade the range in addition to trading the breakout. So this is one of the nice things about rectangles. Whenever you find them, they represent pretty good trading opportunities. So let's now look at the diagram, and we'll look at an example after that. Rectangles. Diagram. Here we have the diagram of a rectangle. Again, this should be not too difficult if we have successfully understood all the previous diagrams we have done. So here we have the prior uptrend. Okay, the price is going up here, right? It makes the peak here, then comes down and makes a trough, then makes a peak at the same level as before, as the prior peak, then makes a trough at the same level as the prior trough, then again a peak at the same level as the prior peak, and a trough at the same level as the prior trough. And following that, there's a breakout to the upside, going here. So what are the key distinguishing features? Well, these two lines are flat, they are horizontal, and they are parallel. That's what makes it a rectangle. Now, as we mentioned, we can use it to trade the breakout over here. We can also trade the range. We can sell it up here, buy it down here, sell it here, buy it here, etc. So rectangles can be used for two purposes. And again, this is an upward sloping continuation pattern. We can also have a downwards continuation pattern. If the price started here and came down, for example, it would do the same thing and then carry on downwards here. So we can have up or down with a rectangle. Let's now go and look at an example. Rectangles. Example. Here we are back to our graphs, and this time again we've gone with the rupee against the dollar. This time period is now starting of 2009 until just past the middle of 2009. And what we are going to do is find a rectangle pattern that follows on, shows us a continuation of the prior trend. So here we have the two peaks I'm going to use for the pattern. It's not going to be exactly parallel, but we'll just go with what we have. And the troughs I'm going to use are one here and sort of this one, which is kind of a largest trough here. Alright, so if I draw this rectangle, I'll get this, and then I will get this. Right, now pardon my drawing, this is not the best drawing. The lines do not look parallel, but just assume that they are. And what we see here is that the price here is on a downtrend, right? It's starting up here, it's coming down, it's coming down, it's going into the rectangle here. It's making the trough here, making the peak here, making the trough, making the peak, all at around the same level, right? And then the price is breaking down, going down, alright, continuing its prior trend. Now what's interesting here is that this line here now becomes the future resistance level, and we can see the price nearly goes up to this resistance level before going much further down. Alright, so this is an example of a rectangle. Rectangles are fairly common in financial markets. If you look around for them, you can find them. This one is sort of more difficult to trade the range, given that the range is quite small. But sometimes we will find rectangles which have a fairly larger range, where we can use it to trade not just the breakout, but also the range. But in this case, we're probably looking at it from trading the breakout perspective.